Another method of breaking down mixed costs is what's called the high-low method. And this is probably the most common one that's going to be used in classes and stuff like that, because it's something that doesn't necessarily have to have software, but it can be done and it gives you a lot more accuracy than just, say, the scatter graph approach. The high-low method, it's an algebraic approach to separating the variable and fixed cost components of a mixed cost. And what it does, it's based on two extreme points of the activity level. So this is done in steps. Matter of fact, this is done in 4 steps. The first step being we need to find the highest and the lowest point in terms of activity level. So first and foremost, in step 1, you need to understand this is all based on the activity level, not the cost. When we talk about high cost, high activity, all that kind of stuff, we're doing it from the perspective of the high and the low activity levels. Forget the cost for the moment. Step 2, we're going to compute the variable cost per unit, or the UVC, using this equation. Notice the quotes here, because we're going to start with the high cost, and not necessarily the high cost, but the cost associated with the high activity. Remember, this is based on activity. So the cost associated with the high activity minus the cost associated with the low activity, all divided by the high activity minus the low activity. Another way to look at this, if you remember algebra in high school, this is rise over run. This is the equation for a slope. We're just putting it in our terms for managerial accounting. But this is going to yield you your UVC, or your unit variable cost. That's step 2. So then we get into step 3. We're going to calculate the fixed cost using either the high point or the low point in the equation. So this one, you're going to pick one or the other. You're either going to choose to stick with the high side or you're going to stick with the low side. But our equation is going to be the total cost minus the UVC that we just found times the level of activity of the high or the low, depending on, and that's going to give us our fixed cost. So in step 4, we're going to take all that information and then we're going to complete the cost equation, putting it into the y equals mx plus b based on the information that we just found. So let's look at an example of this one. Here is our information. Here's a scatter graph. Again, we put that into a scatter graph, but it doesn't really necessarily mean anything to us right now because we're doing the high-low method. So again, following the steps, the first thing I would do is I would cover up the total cost, because the total costs mean nothing to me right now. I'm trying to identify the high activity, which for us is the high number of hours. So I'm going to cover that up, and we're going to try to identify the highest number of activities and the lowest number of activities. Well, the highest activity is going to be July. It's got 280 hours of work used. The lowest is going to be June. It's got 60. So now that I've found my high and my low, now I can open up the total cost and find the cost associated with that. So there are my costs that are associated with it. I'm not going to use any other information in that chart. I'm only going to use those 2 rows and that's it. So then we're going to start putting them into our equations. So again, there's the 2 lines, the 2 dots that we're actually referencing when we're doing the equations. So here's our equation. High cost over, or minus low cost over high activity minus low activity. Again, the high cost is the cost associated with the high activity. So next to the 280, which is our high activity, we have 480. It also just so happens to be the highest cost, but we don't use it because of that reason. So we're going to put in 280 for the high activity. We're going to put in 60 for the low activity. Then for the high cost, we're going to put the 480. For the low cost, we're going to put 150, but if you notice, May actually has a lower cost. It's 140, but we don't care about that. All we care about is the cost associated with a low activity. So we're going to use 150. And when we do that, we're going to find, and do the calculation, we're going to find that the UVC, or unit variable cost, is going to be $1.50 per hour. So that's the slope of our line. Now we need to put that into our equation to find what our fixed cost is. So our equation is going to be total cost minus UVC times level of activity equals the fixed cost. Now we're going to choose one or the other. So in this one, we're going to choose the high cost. So I'm going to start with 480 minus the UVC. The UVC, we already found it's $1.50 per hour. So we're going to put that in there. Times the level of activity. Well, since we used 480 and that's the high cost, we're going to use the high activity. So we're going to put 280 there. Do that calculation. That's going to give us a fixed cost of $60. We can do the same thing if we use the low numbers. It's going to give the same number. So that's why I said you can choose one or the other. But whatever you choose, stick with it. So let's put the low numbers in there just to see what happens. So our total cost would be $150 times $1.50. That stays standard. We just found that. Times our low activity, which is $60. And if you do that calculation, again, it's going to give you $60. So either way, If you go with the high numbers, you go with the low numbers, it's going to give you the exact same numbers. Now, let's put that into the fourth step, which is finishing up our line equation, y equals mx plus b. Y, we said, is the total cost, and that's kind of what we're using this example for, so we're going to keep it at y. M is the slope, so $1.50 per unit, plus b, which is our fixed cost. We just said our fixed cost is $60. So the answer to this high-low method and breaking them up is y equals $1.50 per unit plus $60. That's how you break down a mixed cost using the high-low method.